Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. This new week brings a whole host of earnings with a big focus on tech as we start to see some of those Mag 7 names reporting. And it comes at a time where we've seen significant rotation out of big tech, really the weakness that we're seeing around the semiconductors in particular, also being seen across some of the other big names out there within the Mag 7 space. And we've seen people moving into some of those cyclical names as we gear up for a potential rate cut from the Federal Reserve in September that could herald an economic boom that sees people really seeing value in some of those other big names within the US markets. Now, it's of course worthwhile noting that we're seeing a move into so-called Trump names, but also we're seeing the possibility of a more protectionist America First approach from the front runner for the next US election, boosting some of those domestic manufacturing and industrial names, given the fact that he's likely to ramp up tariffs for imports, particularly from China, but also from the rest of the world, and also lower corporation tax. So we have seen that move out of tech. Are we going to see a move back into it? Because, of course, we've got significant fears around overvaluation for the tech names. And that's something that really is likely to happen quarter on quarter until we see the figures and they're allayed. And then we can see a strength for these names. Now, in terms of how things have been playing out thus far, here's the breakdown for the S&P 500. We've seen 11% reports. So, roughly 50 odd names having reported out of the S&P 500 thus far. You can see that most notably, we've seen the financials with 32% of the S&P 500's financials having reported thus far. Strength pretty much across the board, 83% beating on revenues, 89 beating on earnings. Certainly, that is not necessarily something that can be said for consumer stocks. Non-cyclicals, just 33% of them managed to beat on revenues, and cyclicals 50%. So certainly on the revenue side of things, there's some significant question marks when it comes to the consumer names as things stand. Both of them having reported 15% of the sector thus far. The one other area is industrials, with strength on the EPS side, 70% having beaten, but weakness on the revenue side of things. And that does lead us into an interesting week. Now, the first thing I wanted to show you is this breakdown that I've seen that I thought would be quite interesting, given the fact that we're seeing this focus on big tech this week. And it does highlight the trajectory over the next 5 years in terms of expected growth for earnings. And you can see we do expect to see big things. Some companies have been having it all their way for a long time now. Most notably, you look at that chart from Microsoft, it looks like a continuation of the trend. Nvidia, you can see that incredible ramp up that we've seen over the past year, but that hopefully should continue because it has added a massive tailwind for a stock that's essentially gone from $1 trillion to $3 trillion in the blink of an eye. But things haven't necessarily been as clear cut when it comes to the likes of Tesla, with the major setback then seeing the company hoping to build onwards and upwards from here. And certainly the share price has been taking a significant hit as a result. Now, the first name I wanted to bring to your attention is Alphabet. We're seeing them report on the 23rd. That is essentially the same as the two other names that I'll be highlighting today. And now the earnings from 3 months ago were impressive to say the least. Pretty much a strength across the board, beating on the top line and the bottom line. We saw strength in terms of the advertising side of things. We've seen the company introduce their first dividend and also continuing with $70 billion worth of buybacks. Strength in terms of search, the YouTube, the cloud product, the move into AI and encouraging signs from the AI side of things. So a whole host of positives, really, when it came to Alphabet. So there's an expectation and a hope that we will continue to see that. Now, if we're looking in terms of the breakdown from a EPS perspective, and we're looking forward, this is an annual basis that we're looking at here. There's an expectation that we're going to continue to grow at a really healthy clip. Look at the EPS from last year, 5.8, right? 7.56 expected for 2024. Now, in terms of the revenue side of things, 307 up to 346. So again, we're looking to see significant strength coming into play once again on both top and bottom line for Alphabet. And when we're looking in terms of the quarterly breakdown, you can see just how impressive things were last time around. 1.89 on the EPS side of things, 25% outperformance there versus expectations. This time around, we're expecting to see it drop 1.83. I guess the question mark here is whether that's just being geared up for outperformance, right? If you look at how things have shaped up in the past, you'll notice that the prior figure, so let's say, for instance, if we're looking back to last year, Q2 2023, we saw 144. The expectation for the next quarter was 146. So essentially flat, we saw outperformance. Then we saw an expectation on the next quarter, 159. So again, that's just marginally higher than the previous occasion. And we saw outperformance. Then we saw expectation of a decline to 151. We saw a bump up to 189. Again, outperformance. And on this occasion, we're expecting to see 183, so a decline from last time. So it feels like they're sort of guiding the markets with these low growth expectations, and they managed to beat time and time again. You can see the past 5 occasions we've seen outperformance on the earnings per share side of things for Alphabet on a quarterly basis. Then when we're looking at revenues, it's a similar kind of picture in terms of outperformance. The past 5 occasions we have seen outperformance. We're expecting 84.18. That is healthy growth compared to the last figure that we saw, 80.54. So expecting to see strength on the revenue side of things. In terms of the earnings side of things, expect to see a decline. Here's the breakdown in terms of analyst expectations according to the Icon platform. So we've got 0 across the board in terms of the sells. We've got 10 holds, but by and large, there's a feeling of strength here, and it's understandable to see why. You can see 30 buys, 15 strong buys. If we're looking at the most recent analyst updates, you're looking at sort of a couple of relatively conservative predictions. The most recent one, so 190, 195. Prior to that, there's a couple of 220s, 222, 225, 220, 205. So we're looking around the sort of 205 kind of area, 220 area that potential upside targets according to some of the more recent projections from analysts. Let's take a look at the share price. Here we go. So here's the share price. What we can see here is that we've seen this latest slump where, like I said, we're seeing a rotation out of tech. We're seeing people moving into some of the more cyclical names. We're seeing the Russell 2000 doing incredibly well. Let's look from a long-term perspective, and this does highlight the strength of this stock. And generally, when we see companies like this pull back, it generally just appears to be a buying opportunity, right? You see sometimes, one strong week of downside and then the bulls come back into play. Sometimes it might take place over the course of like a month and a half. If we look at the reaction to previous earnings reports, we can see one here on the 25th of April. We saw that big bump, the pullback, and then we saw the bulls back in charge. On this occasion, we saw a pullback, but ultimately the following month of downside led to a buying opportunity. And then we saw again here the pullback, and then that provided the buying opportunity within a day or two afterwards. So by and large, you're looking at a stock that if we see an outperformance, we don't see that gap closed. We see it then run upwards from there. When we see underperformance or we see some sort of perception of weakness, we see the pullback, but generally we see that gap closed and the bulls back in charge. So where we are at the moment, we're seeing weakness. We haven't necessarily broken out from this near-term trend. We'd need to see a breakdown through your near swing low here of 169. Until that comes into fruition, there's a possibility that we're looking at a retracement here. Let me just see that. I've just got my shallow retracements on at the moment. So let me just put the deeper levels. There we go. So we're past the 61.8, heading towards the 76.4 fib, which is at 175. So if we break the 169, you're looking at a wider, more protracted pullback. But bear in mind, you're looking at a company that if we do see a near-term pullback in terms of a gap lower, by historical standards, people typically deem that a buying opportunity. If we see a sharp spike, generally we've seen this stock then manage to follow through on that. But you're looking at a company that over the long term is a massive outperformer. Are we going to see a COVID style collapse in this stock? There wouldn't necessarily be a justification, but are we going to see a pullback? Well, we're seeing a bit of a pullback now. It's a healthy thing for a stock like this. We see it in the past. If you're to look at, say, previous occasions, you could look back here and say, well, the company's dropped 14%. Soon enough, we've made it up within the space of a week or so. And a lot of the time, we see a lot of these jitters coming into earnings reports. And so, it's worthwhile noting that a lot of the time people are fearful that they won't manage to keep up their solid growth rates, and then we see them outperforming as a result. So I remain bullish of this stock. If we do break the 169 mark, we'd be looking at a wider retracement coming into play. But, if the last quarter is anything to go by, and if the fact that they managed to set up these EPS outperformances, I wouldn't be surprised to see another strong quarter here for Alphabet. Then looking next at, let's just bring this up. We're looking at Tesla. Of course, Tesla has had hasn't exactly had it all its own way. Let's put it that way. It's had a difficult year, and part of that comes down to the fact that they have significant competition in China that they are struggling with. Frankly, when you're seemingly the only shop in town in the West where everyone wants a Tesla when it comes to EVs, it's one thing, but when they're competing on a global scale and they're competing against companies in China like BYD, they are struggling because the prices keep going down and down, and this price competition doesn't necessarily serve them too well. What's happened as a result? You can see that here on this annual earnings per share. We were at that period where it was a loss-making enterprise. We saw that move into profitability. 2022 was the peak, and we're trying to recover from there. 2024 expected to be the worst, right? This is supposed to be the trough. So there's an expectation of weakness this year. There's an expectation that their margins are going to be hit because of a number of factors, but in part down to this price competition over in China. And there's some hope that we might see the likes of Donald Trump or Joe Biden or potentially Harris coming in with a more protectionist stance and protecting their domestic EV companies from the likes of BYD and some of those cheaper Chinese alternatives going forward. But certainly from an earnings per share perspective, things look a little bit more troublesome. If you're looking in terms of a revenues perspective, we are expecting to see revenues increase over the course of this coming year or 2024, whereas we're expecting to see 2.43 down from 312 on the earnings per share. So it's really a margin story. Now, of course, there has been much made of the 8th of August robo-taxi event, with people hoping that this is going to essentially light a fuse under the share price, but that's now seemingly being called off and postponed. So people will be looking out for hints over when that might be happening. But these new sources of revenue, most notably around sort of services side and not necessarily just the sales of vehicles, does provide a potential tailwind for the company. In terms of the quarterly earnings per share, there's an expectation that Q1 was the worst quarter, and that hopefully things will improve from here on in. 0.61 up from 0.45 expected. Revenues a similar kind of thing, basing out. So is this a buying opportunity? Well, we have seen outperformance in terms of the stock of late, of 30% bump. Let me just show you why that's happened. And it's because of the outperformance that we've seen in terms of deliveries. We've seen a rebound in deliveries 1% higher than markets had been anticipating. That has been announced in the lead up to this earnings report. And where do we land in terms of the outlook from analysts? Well, this stands in stark contrast to the likes of Alphabet because it's essentially a bell curve. It's a split. You can see here, 8 strong buys, 14 buys, but then 7 sells and 4 strong sells. The most common view is to hold, and that is 17 analysts. If you're looking at the projections of recent reports or recent targets, you're looking at a real wide spread. So we've got opinions on both sides of the spectrum here. Some people thinking this is massively overvalued and we're expecting to see a massive pullback from here. Some people thinking that the pullback is overdone and that the rally at the moment that we have been seeing of late is set to continue. Well, let's take our own view from a technical perspective. Here's the chart for Tesla. From a weekly perspective, here we go. We can see that we have broken out from the downtrend that has dominated 2022, 2023, and the first quarter of this year. Instead, we've seen this massive ramp up into the 29s. That is the swing high that we saw established at the back end of 2023. And we're seeing some indecision around that level. There's no surprise to see that indecision when you've seen such a massive ramp up in the lead up to an earnings report. It does mean that I would say the risk is probably to the downside, because if we see a strong report, people might think, well, that's already been priced in. People kind of anticipated that when we saw better than expected deliveries data. If we see a weaker than expected report, then people will say, oh, we've overcooked it somewhat with that recent rally, and therefore we see a significant pullback from here. So I would say that if we're looking from a wider perspective, there are signs that this could be the bottom, and certainly a breakup through 29.2 would paint a picture of us having bottomed out and that we're going to push onwards from here. But I wouldn't be surprised to see this report potentially giving us a near-term pullback, and then potentially we try to push onwards and upwards from here. And certainly what's happening in terms of, say, Donald Trump, if he was to come out with supportive measures, that could benefit this company. Now, if you're looking in terms of the 4-hour chart, you can see that we're sort of consolidating. It's almost a symmetrical triangle formation that we're playing within at the moment. This consolidation taking place just below that historical resistance level does look like we're setting up for a surge. And certainly, given the weakness we're seeing within the Mag 7 names at the moment, it's holding up pretty well, considering the fact that we're coming off the back of a massive rally. So this points towards a coiling, a tightening in terms of price action. Are we going to use this to leverage to push onwards and upwards? The earnings will be key in determining exactly where we go from here. But certainly there are tentative signs at the moment that the worst is over. That would tally up with the expectations in terms of earnings that this year and this quarter does show that the worst is behind us. So let's see, maybe if you look a year from now and you'd be saying this is a really good buying opportunity in terms of a buy and hold. But if we're trading it, there's certainly inherent risk given the fact that we've got a 30% rebound behind us, built in no small part on that outperformance in terms of deliveries that we did see from Tesla. But certainly this is going to be a really interesting one for traders to be watching as we go forward. And the final name that I wanted to bring to your attention is Visa. So Visa we've got here where we've got an expectation that the company is going to do more of the same. I mean, this is an incredible company. When you see the size of the company and the fact that it can continue to grow at such a healthy clip, Visa's been around for a long time, right? And every year at the moment, we're seeing them growing their earnings by like 10%, right? So 7.59 up to 7.5 up to 8.7. Now expecting to see 2024 at 9.9, then 11s, 12.5s, 14.2s. So this is a ridiculously reliable and consistent company that we're looking at here. And the expectation is that this year we'll see more of the same. Now, of course, there's a tie-up in terms of the activity within the US consumer in particular at the moment. And there's some question marks about that, but we'll get into that. So it's a very good company and it's growing across revenues, but also growing heavily on margin. So if you look here in terms of the revenues type side of things, are going 24, 29, 32, up to essentially 36 billion expected this time around. And they're also really strengthening across the board in terms of margins and helping with earnings per share. So, you know, if people are looking for reliable companies that have a proven track record, it's companies like this that, you know, maybe they're not the most fashionable names and people are looking for exciting names out there, but Visa, you know, it's a really impressive company. In terms of earnings per share for the quarter, we're expecting to come in at 2.42. But if you look back over the past 8 quarters, they've beat on every single occasion. So are they guiding us lower to be able to beat? There's a strong chance that that is the case. 242 expected, down from 251 in the second quarter. And if you're looking at where they were a year ago, 216, so higher than that at 242. It's a similar kind of thing in terms of outperformance on the revenue side of things. 8.92 billion expected. That's up from 8.78 a quarter ago. Very gradual, steady increases, and generally you're looking at a company that manages to beat expectations on both top and bottom line on a regular basis. Here's some interesting sort of things to note. We've, of course, seen a bit of a pullback in terms of consumer sentiment recently. There's some sort of question marks around the US economy at the moment. We're seeing some jitters in terms of the jobs market. You can see the retail sales boost that we saw after that sort of post-COVID surge. And certainly when we're talking about the value of retail sales, we saw a big ramp up in no small part down to inflation, quite frankly, but that's starting to tailor off a little bit. So there's some question marks as to whether that's going to influence the revenues for Visa. In terms of market perception, you can see there's only one way that people within Wall Street think this is going, and that is up, because you can see in terms of projections, the price targets at the bottom, we're looking at 17% higher than where we are, 10%, 19, 17, 10%, 17, 13%. So by and large, everyone looks to think this market is going upwards when you're looking at the analysts on Wall Street, and that comes down to 10 strong buys, 22 buys. So, we're looking at a very consistent performer here in terms of Visa. So let's get down to it in terms of the share price, the most important thing of all. And we can see that we've actually seen a nice pullback of late. Not so nice for someone holding the shares, but pullbacks are good for people trading the shares and people that want to get into them over the nearer term. We can see in terms of their last earnings, we saw some volatility here. We saw that initial pop, then we pulled back and we just continued on this downward trajectory that has been dominating over the past 3 months. It's taken us back down into this ascending trend line, which really highlights the possibility that soon enough people deem this sell-off as being overcooked somewhat. And given the trend of this stock, let's go on to the monthly, you can say this is the kind of thing people ultimately buy back into and people get back on that story. And there's a perception that soon enough the central bank will move from being heavily geared towards inflation and controlling inflation and moving more towards a pro-growth stance, wanting to help push the US economy forward. Certainly, if you did see Trump coming into power, he seemed to be very pro-growth and very pro-stock market. Bear in mind, he's going to give you an update every time you see record highs for the Dow or the S&P 500. And so we've seen this pullback. I wouldn't be surprised to see this represent the low, but we are seeing a bit of weakness at the moment. We're recording this on Thursday. So do we see a bit of weakness coming into this report? Well, that's possible. But I think whether we bottom out here or whether we see further near-term downside and then we see the bulls coming back into play, I think soon enough the bulls will come back into play. And given the fact that we're sort of playing around this trend line at the moment, if I was to say where it goes from here, I think there's a good chance that this weakness that we're seeing at the moment might be short-term in nature and the bulls come back in near enough. Now, if we're looking for a signal for that to come into fruition, we'd need to see a break up through this 280 level to essentially break out from this downtrend that's dominated since the peak that we saw here in sort of mid to late March. So look out for that level, but at the same time, we're looking out from an intraday perspective, and you can see that break that we saw up through this resistance level, not there, 271, points towards the possibility that this downtrend is over already. So unless we see a breakdown through that trendline support alongside this 258, I wouldn't be surprised to see any near-term downside representing a potential buying opportunity for Visa. So long-term trend points upwards. The expectations point upwards. The previous trend in terms of how they've performed or outperformed each quarter in terms of earnings, in terms of revenues, have all pointed upwards. Whether that plays out this time around remains to be seen. We can only use historical data as a guide, and as things stand, everything from that perspective is positive. So, this is certainly one to be looking out for. It has been a very reliable performer over the years, and the projections point towards more of the same. So keep an eye out for Visa as a good proxy also for consumer behavior and consumer spending, we're likely to see significant volatility around some of those consumer cyclical, consumer discretionary names as people try to glean information from the spending habits disclosed within the latest Visa earnings reported on Tuesday, the 23rd of July.